Thank you, Keith. Good morning, ladies and gentlemen. The topic I'll be covering today would be on GCC, mainly in light of oil and the budgets which the recent countries have announced. I'll be giving a much brighter outlook on the smaller countries, and I'll leaving the UAE part mainly to be covered by our next speaker. I'll start with how the recent economic outlook which IMF issued has shaped up the economy, global economy. Oops. It's not working. It's not.
Right-hand button.
Yeah. The right button. Thank you. So the global growth in 2015 and 16 projected by IMF is 3.5 and 3.7%. As per IMF, global growth will receive a boost from lower oil prices, which reflect to an important extent the increase in supply from across the globe. In real terms, growth in GCC is expected to be positive because of the increased supply. But in nominal terms, it will be negative, and it could range between a negative of 3% to 15% from across the board in GCC. Qatar to be slightly less affected because of long-term gas contracts. Their contracts from companies they range between 5 to 10 years. So we expect a little lesser impact on Qatar. Now, if you see the chart, the Russia is the one which is expected to be the most impacted because of the oil prices. They say that their break-even oil prices is above $100. So this will be the country which will be most impacted. The only country IMF recently upgraded its outlook was US only, because their shale oil production is catering to their demand, and that's where the main impact is coming in. In Saudi Arabia, you see there's a little decline in their growth forecast, mainly because of oil prices. Now, the main reason for the oil prices decline, this is what we have seen. This is where the oil prices have been in the last, 5 years. They have been, on an average, they have been around $100 per barrel in the last 4 or 5 years. But recently, they have seen a bigger decline. And what happened in the last 4 or 5 years is that the oil prices remained at $100 per barrel. This encouraged the countries to increase their supply. They increased their investments in oil, and the oil supply increased gradually, which is the reason why we see that the oil production globally rose from 90 million barrels to 93 million barrels. Another reason for the decline in the oil prices have been the increase in Libya and Iraq. Many countries assume that Libya and Iraq would not be able to catch up after the war very gradually, but they picked up very good pace, and they increased their production very gradually, and they are not a very sustained level they are producing. Other reason is the main shale oil. Shale oil has been doing very well. In the last 5 years, their capacity has grown from 2 million barrels to 6 million barrels as of now. So this is one of the main concerns facing the GCC as of today. What we expect in terms of oil, that where it will be in the next 5 years. Now, if you see the current graph, the current table, it tells you where does the oil come from and what is the cost of production of those sources. Now, if you see that 20 million barrels of oil comes from Middle East, this is from the land sources. The cost of production ranges between $15 to $40 per barrel. So on an average, around $29 per barrel is the cost of 20 million barrels. Now, if you go to 20 million barrels from globally from offshore shelf areas, which are a little costly in terms of production. So the average production is $43 per barrel. Then 10 million barrels comes globally from extra heavy oil and oil from deep water sources. The cost of production is $51 billion per barrel. Then 11 million comes from onshore sources of Russia. 12 million from inland productions globally, 5 million barrels from ultra deep waters. So on an average, the sum product, if you take, the total cost is $47